In a significant economic shift, the United States economy has contracted for the first time in 3 years, raising concerns about the country's financial trajectory under President Donald Trump's leadership. The contraction, recorded in the first quarter of 2025, comes amid the administration's aggressive push for new tariffs targeting several major trading partners, according to official figures released by the U.S. Commerce Department. The nation's gross domestic product (GDP) declined at an annualized rate of 1.4% from January through March. This unexpected downturn breaks a long-standing trend of steady growth and has intensified scrutiny over the Trump administration's economic policies. Analysts point to a steep rise in imports and a slowdown in exports as major contributors to the decline. The trade imbalance has widened significantly as American businesses increase their imports in anticipation of future tariff hikes, while foreign buyers have pulled back in response to reciprocal duties and strained trade relations. Several industries, particularly manufacturing, agriculture, and technology, have reported disruptions in their supply chains, rising costs of production, and declining overseas demand. President Trump, however, has deflected criticism and placed blame squarely on his predecessor, former President Joe Biden. In a televised press briefing and on multiple social media platforms, Trump stated that the current economic challenges are a direct result of what he called 4 years of economic mismanagement and disastrous policy decisions under the Biden administration. "We inherited a structurally weak economy bloated by uncontrolled government spending, open trade loopholes, and job-killing regulations," Trump said. "My administration is taking decisive action to rebuild American industry, secure our borders, and level the playing field through fair trade. The short-term effects are necessary for long-term recovery." Despite the administration's justification, reactions from economists and policy experts have been mixed. Some argue that protectionist measures could yield positive results in the long term if domestic industries receive the support they need to compete globally. Others caution that extended trade tensions could lead to persistent inflation, declining consumer confidence, and even a recession if not carefully managed. On Wall Street, investor sentiment has shown signs of unease, with stock markets fluctuating amid fears of prolonged economic instability. Consumer spending, one of the pillars of the U.S. economy, also showed signs of weakening during the quarter, adding to concerns about the outlook for the rest of the year. Political observers note that the economic downturn is likely to play a major role in the upcoming 2026 midterm elections, with Democrats seizing on the figures to criticize Trump's leadership and Republicans rallying behind the narrative of economic correction after Biden's term. As debates over trade, tariffs, and fiscal responsibility continue, Americans are watching closely to see whether Trump's economic gamble will pay off or further deepen the current slowdown.